Today we have with us Ankit Mehta, Director of Strategy, M&A and Ventures at Quest Diagnostics and graduate from Stern School of Business. Is there anything you'd like to add or tell us about yourself?
Hey, Navan, thanks for having me on your podcast. Yeah, just like to add that from the background perspective, I currently am at Quest driving M&A, venture investing, and inorganic growth. But prior to Quest, I had master's in bioengineering and 10 to 12 years in as a scientist in largest medical device companies in the world before transitioning to a role like this.
Awesome. So, anyways, our first segment is about your career transition. So, could you walk us through your pivot from investment banking to venture capital?
Absolutely. So, and that's an interesting question. I think I'll try to expand on the nature of the question.
Yeah.
Prior to investment banking, I was a scientist in medical devices. And the reason that I bring it up is it's extremely important to have domain knowledge, technology and science,
Yeah.
how that is crucial for one to be successful in the space when you are transacting deals in worth millions or billions of dollars.
Hmm.
Having a foundational and fundamental knowledge on how these technologies work is extremely important. Um, so having said that, before getting into investment banking, I spend a lot of time learning a lot about new technologies and how their application is in the real world. While I was doing that is when I understood the concept of investment banking, where you are trying to grow a business, sell a business or an asset. And for that to happen, one of the key diligence criteria is to understand what the business is and from the technology perspective. So having that technology background was a differentiator
Yeah.
when I was doing investment banking.
So basically,
Um,
specializing in a particular field, like the field that you want to go into. For example, you did biotech, so having technology and
mhm.
science knowledge really benefited you. So that's what you're trying to say, right? Like someone should go
That's
into that
correct.
field.
Yes, having that
Hmm.
domain or market experience that basically allows you to connect with different companies and players in the
Yeah.
space. I can talk the language with these different partners so that I can better understand the business
Yeah.
and
Yeah.
work closely with them.
Awesome. So
And so I think the question was around switching from
yeah.
investment banking to venture investing, correct? So
Mhm.
it was something that I was not intentionally looking for, but it was more of a learning curve when I realized that in any business you can grow in two ways, organically or inorganically.
Mhm.
And in inorganic expansion, where you are basically trying to have a partnership, acquire a company, or invest in new technologies and companies, is where I realized that that was where I wanted to be using my
Mhm.
experiences and competencies to drive growth in a business. So when I learned more about it, it is different. Think it from like a buy side perspective, where you have a capital access that you want to deploy, which drives growth for your business in future years. That's what I do at Quest right now.
Yeah.
So, which is investment banking was more so focused on trying to accomplish the goal of a client. Either they want to sell a business, buy a business, do a partnership, etc., or raise capital. And then you do it for multiple clients over time and you are growing in that space. Here, I'm using very similar skills, but I'm growing a business, like one business.
Mhm.
So the value creates over time, accretes over time with that approach. And
Yeah.
I found that very meaningful for myself and my career.
So for someone like my age or someone I guess a bit older, someone who's just finished college,
Mm-hmm.
if they want to do investment banking, maybe for 2 to 5 years, and then they want
Mm-hmm.
to like transition into venture capital. Like, is it something that can easily happen, or is it something like a steep learning curve, or something that's difficult to transition into?
It can happen.
Mm-hmm.
I wouldn't say it can happen easily. There are some considerations when you think about it. So even before we talk about venture creation, sorry, venture investing, I just want to be clear that there are multiple layers here. So there is a venture creation. So you start a company,
Yeah.
it's a venture, you're creating a venture. There is an accelerator model where a lot of companies come together and there's a, a set up a platform which is set up to help some of these early stage companies to get access to talent, get access to resources, to get access to
Mhm.
network. That's an accelerator model. So venture creation, accelerator model, and then there is
If you don't
growth
mind, if I
financing.
interject here. So, like in the
No, go ahead.
accelerator model, like does the company that sort of funds the other company or gives them resources, do they get like a part of the company? Do they get like a percentage ownership of the company? Do they get like a share of the profits? Like, what's the gain for them?
That is correct. What you just said, Nevan, is what it is.
Mhm.
It's, in other words, it is. So think of it as like one of the largest accelerators in the world, Y Combinator. And all similar accelerators have very similar model. They have an application process. So thousands or maybe tens of thousands of companies apply and basically pitching to
Mhm.
be a part of their cohort. What happens is that when, say, they have 2 or 5% acceptance rate, when they get into the cohort, the way it is structured is the the accelerator
Mhm.
will give you access to things that you would need to grow your company. And it can be anything. It can be talent, it can be some money they'll give you. Um,
Mhm.
it can be access to technology, it can be office space,
Yeah.
it can be partnership, access to network. All of these things that you would need as a company to grow is what they will provide you. In return, they will, you're right, they will want some percentage. It could be
Yeah.
6%, 10%, some percent of the company.
Wait, so how do these applications work? Like, what do you submit on your application? Is it like a one-on-one pitch, or is it some written statements or something like that?
It's generally, it kind of depends, different for different accelerators, but generally speaking, it's like, what's your idea?
Mm-hmm.
And what are you trying to solve for? And what's the best way to get that across? Generally, it's a like a very succinct, concise, precise PowerPoint. Here's the problem. Here's the solution. Here's the market. Here's our technology, and here's how we're gonna solve it. And then I think most importantly, I think all everybody wants to know how you're gonna scale it. You want to be able to solve a problem, which is a real problem, and it's everybody's problem.
Mm-hmm.
So that is a high level view of having your story or a narrative that kind of goes in that flow where you can communicate and demonstrate what the problem is and what the solution is and how you can
Yeah.
scale it. So that's how the applications are then looked at. And these are all seasoned entrepreneurs, seasoned VCs who are looking at these applications. They see thousands, if not tens of thousands of them a year. So they exactly know what they're looking for.
Yeah.
So that's the accelerator model. And then there is growth financing. Growth financing is essentially is where most corporate ventures come into play, and private equity is where you've shown your problem, your solution works. You have some clients, so you have commercial validation. Market has been using your product or service, but now you need to grow and you need growth financing. That's a slightly different segment. It's which has much lesser risk because you already shown it works. So the returns are also kind of contracted, but it's less risk. So I said three things: venture creation, which is early stage, angel funded. Then there's an accelerator model, and then there is growth financing. So coming back to your original question, sorry to digress here a little bit, but investment banking, can you transition from banking to venture investments? It depends where you are going. What banking does for you or someone like you at that young age is brings in discipline. So what does a banker do? The banker basically is trying to understand how is this business working? What is this business? And then they are going out and selling that business to different potential buyers.
Hmm.
For you to do that, you need to have a very, very strong understanding of how to build financial models, how to represent and articulate what a company is doing in the most simplistic way to potential buyers. And so that's one is by a financial model. Second is how you communicate what the company is doing, the product and the services, the market, etc. And the third component is due diligence. There's one thing that you, when you speak and understand from what the company is doing, but really understanding like whatever is that you're buying or selling is what it really is. The financial diligence, the technology diligence, the legal diligence, all that learning that you would get in investment banking will be extremely helpful and meaningful when you transition into these different venture careers.
Okay, understood. Now moving on to more of the biotech aspects of the things that you did. So, like, which
Mhm.
core principles from biotech are like applicable in strategy and investment decisions? And overall, how do they just help you? Like, how does your knowledge help you overall?
I think so from the biotech or call it the domain experience and expertise, the way it helps you is two parts. One is it differentiates you. Imagine you are a venture capital partner and now you're looking for talent. When you are looking at two different individuals, one who has experience with banking, he understands how the transactions are run, you do diligence, you structure deals, you negotiate them, all of that component. The other individual has all of that as well because you both have banking background or similar backgrounds. Now, if I, on top of it, have a domain experience, either I had a bachelor's or master's in bioengineering or biotech, that science competency or learning just differentiates me. And why does it do that? Because now, if I am talking to an early stage CEO, company CEO, he doesn't have any he doesn't have any real data, market data in terms of revenues or financial data. What he has is an idea. Now, how you, Navan, as an investor, are going to understand that that idea has value? Like, is it really solving a problem?
Mhm.
Like how would you understand that there are so have you having that background gives you a working knowledge. You may not really mean you may not be an expert, subject matter expert or a PhD, but even having to converse with founders, with CEOs, with chief scientific officers, being able to converse with them, asking meaningful questions is a big differentiator and probably even to the extent where it can enable success for you.
Doesn't it also add
Um,
credibility though? Like if you know
mhm.
stuff about the person's business, if you understand how it works, you are understanding what it says, are they more likely to go with someone like that who really understands what their business is doing rather than someone who's good at investment banking, they can do the job, but they don't just understand what the officers or the managers are really trying to convey.
That is correct. It's that likability factor, right? People
Mm.
who think
Yeah.
alike want to work together. It's not think alike, but think similar.
Mm.
Absolutely,
Yeah.
yes. It does open up more doors and ability to work together.
Okay, awesome.
Audio Jungle.
Now let's move on to a segment for younger venture capitalists or venture capitalists just starting out. This is for someone like me or who's in my position, just going to college or who's already in college. How much weight does a candidate's college background or the college that they're from, the course that they pursued, carry when they are breaking into venture compared to something like raw intellect, judgment, or just the general ability to source and evaluate deals?
Well, that's a great question, Navan. I think the way it generally works is it does have Ivy Leagues or elite universities
Yeah.
does provide or open up doors for individuals who are looking to enter that space. Generally, VC space is very competitive. It is expanding. It's a small network. It used to be a small network. Now it is expanding. But I would still say that yes, depending on what university you go to, that will certainly impact the amount of time you need to break into that space. Universities like Harvard and Stanford and Wharton and some other universities, they have very solid programs that enable these students to do internships very early on with some of the top VC firms. And I think that's incredibly helpful. In the end, what matters is how soon you get into that space, build your network, build your credibility, and grow from there. So, short answer is I think it's very helpful, and it carries a lot of weight. The other component is that having intellect, having the ability to work hard, hustle and do all the things that you need to do to differentiate yourself, can that also lead you to that industry and the roles? Yes. But that is really coming down to your ability to connect with the right person or the right team and they believing in you to be able to give you that chance. So, yes, there is a path to that. I wouldn't discourage you that there is no path that one can take in that direction. Is just that that requires a lot more grit compared to the previous the former one that I talked about. Also, some of the times I've seen is that some of these programs, including MIT and others, like
Yeah.
they have a the way they break into early stage VC career is where you are building. Again, I'm coming back to domain. If you are an AI scientist who is very interested in learning about VC space, so now, with the network, that alumni network that these
Mm.
universities have, that again can unlock doors for you at an early stage. So even if you don't have any VC experience, you can have a 6-month internship or a 9-month co-op with some of these venture firms.
At the colleges, like while you're studying at college.
While you are studying during summer, yes, you can
Got
be
it.
at a venture firm. And I think that's incredibly helpful for someone at that early age.
Just to add to your point, also for those interested in venture capital, pursuing it just after college, most of these top colleges have great student-run venture programs. Like they have these student-run venture funds. You can consult real-life companies, conduct research, work with those pursuing master's degrees at those colleges. Like for example, your Princeton, Yale's, Harvard's, who have great
Mm-hmm.
economics, business, and finance-related models. You can like work with the people studying MBAs over there. Obviously they also will be top talent since they've gotten into those colleges. So you can work with these people, gain experience early on, so that will like steady out that transition from college to venture capital. But I wanted to add to this question. I've heard this misconception of these top colleges, they aren't as important as what you make out of the colleges. And while it's true, you have to make the best with the college you have. As being someone
Mm-hmm.
who's gone to a top business college, can you say how going to NYU, how that impacted you and how that changed the trajectory of your career?
Yeah, no, that's by far one of the most important questions for young adults. And I think the way I think about top MBA or top college programs is that see, it doesn't make you any smarter. It doesn't have these programs are not going to teach you any new content or different content. How are they different is, I would say, on two or three levels. One is their faculty. Their faculty are one of the top faculties in that space in terms of what they are teaching or bringing to the classroom. They have real world experience. They work with real companies and industries. So very important in what faculty they have.
Yeah.
Second is that what alumni network in the end, that's what you are going to have when you graduate from these programs is a degree and an alumni network.
Mm.
And I do think that many of these programs or colleges have close knit network, and which is
Yeah.
I'm speaking from my experience at Stern, the great faculty, amazing alumni network. So the alumni network is incredibly meaningful when you are either you're breaking into a new space, transitioning from current job to a new role, or just learning about what's going on with your fellow alumni. I think it's that's a great asset as a program. And the third component is, I would say, is the environment where if you go in a place where, and when I say environment, is what I mean by is your fellow current class students, the intellect, the intellectual quotient, the intellectual capital, the emotional capital that you will have around you for 4 years or 2 years, depending on the program, will really shape you in a very different way
Correct.
compared to when you compare different programs. So those are the three things that I see
Yep.
as a differentiator in these programs.
Awesome. Moving on to something not as related, but something that we hear all around us now, AI, like taking jobs. How has the rise of AI reshaped like the competitive dynamics for like junior talent, junior bankers or venture capitalists looking to secure a job as an analyst or associate, or just an initial job that you get in an investment banking or venture capital firm?
Yes, I like your questions, Navan. I think this one is something that we are dealing with
Hmm.
as we speak, because you're right. The pace at which the technology is evolving, the dependency on the technology, the belief in the technology is evolving at a very rapid scale. Um, it is impacting the way we are looking at recruiting. I'd say it is not completely replacing human talent at this stage. It
Yeah.
may at some point in future, we don't know how quickly that will come, but
Mhm.
it is impacting to the extent that if I were to hire four analysts, I may hire two or three and have those analysts a reduced workforce and have them use AI to fill in for the
Mhm.
third or the fourth analyst.
Mhm.
So it is impacting. So when you now translate that across all global opportunities, yes, there is that reduction in requirement to hire for junior level talent, because some or much of the work is repetitive at times, and if AI is able to address it, then companies are reconsidering how much they want to use AI in some of the work that analysts are doing.
Hmm. Awesome. Now moving on, in a person's like initial years in venture capital, what is one skill or what is one core attribute that you believe gets put to the test the most?
One core attribute
Mhm.
for somebody seeking a job in venture capital is that is most valuable.
Hmm. Yeah.
It's an interesting one. It's tough to pick one.
Or you can pick like two or
Um,
three. Um, that's fine.
yeah, I think at a junior level, it is important for someone who can simplify and articulate what a company is doing and then kind of quantify it. So quantitative skills is important. And then if any level of any experience in the marketplace. What I mean by that is that you are, I think I'll come back to that domain component again. At that level is somewhere, what I would need from my analyst is he or she can kind of help me quantify the opportunity. And how do you do that? You are very comfortable with numbers. You can build business models in Excel or similar programs, and then you are familiar with the market trends, either through your educational background or just your deep knowledge in the space. I think those are the key components. And I mean, needless to say that exceptional drive and hardworking, those are like table
Yeah.
stakes. I mean, I don't even want to put that as a separate item. That is a must, that's a requirement. But I'm talking beyond that. in terms of how you be more successful, efficient, and bring value to the table at a junior level. It
Yeah.
changes over time, but yes, I hope that helps.
So just jumping back to the AI point, or the AI aspect of venture capital, the skill that you said, like quantifying opportunities, identifying trends in the market, can't AI just do that for you now? Why do you
Yes.
need someone to do that in venture capital now?
Yes, it does that. I think, and there are a lot of AI platforms that are out there comparing companies base. They take all the inputs which is out in the public domain and then give you a score, a risk score, a probability to exit score, potential valuation. There's all sorts of interesting technologies and platforms that are being built that you don't need so much human intervention or like human like support.
Mhm.
But I think you still need some, maybe to the point is I don't need five, but I maybe need one or two-person team to help me make sure that what I see is what it is. Because
Hmm.
even if AI is doing it, I would rather have, this is coming to the point where can I fully trust it? What if
Hmm.
it's making a
Right.
mistake? Or what
Yeah.
if it's, it's biased in some ways? And when
Hmm.
you're trying to deploy capital, you don't want to leave any stone unturned. So that's where the human reliance is helpful. But maybe to the point after, say, 3 or 5 years, maybe that also goes away.
Got it. Understood.
Yeah, and I think the other component is where also, as some early stage career, you, I rather I like the my teammates to be meeting with and taking meetings
Yeah.
with a lot of companies who want to work with us. That's something that I cannot do myself, and I cannot
Yeah.
have AI do. So again, that human interaction, right? Somebody's interested to work with our fund or with our company. They want to meet, a CEO wants to meet somebody from the team. That's I will again need that level of human interaction.
Got it. Understood.
Audio Jungle.
Now, moving on to someone who's super ambitious, wants to start their own VC firm. Someone who's at an early stage in their own career, say maybe a 20-year-old aspiring general partner. That's someone who has a very high position in a venture capital firm. What would you define as the first actionable steps towards formulating that fund?
That's a very ambitious question, Nevan. I must say that. But I know actually one or two young
Mhm.
venture capital founders. In my professional experience, I had a chance to meet with them, and I was intrigued by the journey they had. But what I understood is that for someone that early in career, you need two things. You asked for one, but I'll give you two. Is one is access to your own capital, which can be through a trust fund, family fund, friends or family who've given you money to manage, and they believe in your ability
Mhm.
to invest wisely.
Yeah.
That is the first step, and then you can seek more investors. These are limited partners in your fund because you are a general partner. You can get funds from other entities, but a starting point is to have your own money in the pool. And the second component is what kind of network you will have. What do I mean by that is that is one thing you have money or access to money.
Mhm.
How are you going to get the deal flow? How would you get like the next big thing knocking on your door, or how are you gonna find it? So there are these two very big components that are extremely crucial for you to kind of start your firm. I mean, you can start your firm with the fund, but then what is the next logical step you're going to do? You need to have, I would say, both in parallel. Bring your fund together, raise capital, your own or somebody else's with it, pooled in, and then at the same time, trying to figure out how to build a deal pipeline or a flow of deals
Yeah.
by networking. So when you have both, then at some point merging, you'll be able to be an active VC fund.
And I also like the point that you made, that if you're a young venture capitalist, like, and you're just starting your own firm, why will a seed stage company or a younger company, why will they look to you for funding? Because you may not have the experience or the necessary advice that they require, as compared to someone who's done it for maybe like 20 to 30 years, who's seen companies like theirs grow, come into the industry, so they would probably prefer someone, I think, who's more experienced. But anyways, I just wanted to
That's
ask,
right.
let's say you have this experience, you have this knowledge. How does an emerging venture capitalist position their fund story and market themselves effectively to prospective LPs or investors? And to follow on that, can they do this if they don't have an initial access to capital? Can their first move towards acquiring capital be approaching these LPs or investors?
Yeah, no, that's a good question. So can you repeat the first part of the question again,
Hmm.
Nivan?
So it was like, how can like fund managers or general partners, how can they market their fund story and market themselves
Hmm.
to prospective investors?
Yeah, I think one of the key piece in marketing yourself or your fund is going
Hmm.
to be a thematic component. You are a fund which is focused on sustainability in a region,
Hmm.
or you are a fund which is focused on women founders,
Hmm.
or make it so specific
Yeah.
where it is really a niche,
Hmm.
and you are the fund to go to when any or all investors are looking to get exposure to that segment.
Hmm. Yeah.
That is one way to create your own space or place in the VC, I would say in the VC arena where
Hmm.
you are hyper focused on that and use it as your branding uh, tool to grow. Um, I have seen where in situations, to give you an example, where there are these firms which are very much focused on solving longevity with a particular solution. Then there are these firms which are only hyper focused not on financial returns as much as they are focused on social impact.
Yeah.
So I think having to build that theme and use that continuously, consistently over time, that is a good strategy for an early stage VC founder.
Yeah. Before we move on to the next part of the question, uh,
Hmm.
I just wanted to add, or I wanted to ask, I guess you could say, that let's say there's a new venture capital firm and they prioritize sustainability, as you said, like their full focus is on sustainable firms. And let's say
Hmm.
the general partners, there may be two or three, they are like, they've studied like energy related economics in college, they've mastered in that, or they've done their undergrad in that. And wouldn't that be like a great combination to have? Like specializing in the field and then having like a vast expanse of knowledge in that field as well. Like, wouldn't that be like just a great combination for someone who's trying to start a venture firm?
Yes, it will be. I think it brings in a lot of story and narrative in terms of why you are trying to do what you're trying to do, and with your formal education or knowledge in the space is incredibly helpful. So yes, the short answer is yes. That will be very attractive, I would imagine, for someone who is trying to
Yeah.
invest in that space.
Hmm. Yeah. So moving on to the next part of the question. If someone doesn't have this capital, they don't have access to initial capital from family members or their own capital, how
Hmm.
can they really like go to LPs, or can they really ask investors to give them capital, or is it something that's really unfeasible?
Yeah, I can barely imagine I'm a very optimistic person, so I wouldn't say that's not absolutely not possible. Anything can happen if you are persistent, but it seems very unlikely
Yeah.
with no experience or and no capital of your own. You can raise capital from LPs. It's a big question for them. Why would you I invest in your fund? The only differentiator, if or the only reason I can think one would consider doing or funding or being an LP in your fund is you've demonstrated a deal flow that here are 10, 15, 20 companies you have worked with who are interested to get funding from your
Yeah.
fund, and that those could appeal to the LPs
Yeah.
and they take that leap of faith and fund you. So that is possible, but yes, I wouldn't say that's like a normal road to raising
Mm.
fund.
What I was trying to ask is that let's say I want to be a GP or general partner at a top firm. Is it better for me to progress through promotions in my existing firm? Or is it better to just go out on a limb, start my own venture capital firm and become a GP over there? Like what is the preferred path to becoming a GP at a top venture capital firm?
Hmm. What is a preferred path? How do you define preferred? What do you mean by preferred?
I guess you could say something that would be easier to achieve, or the possibility of achieving that path is higher than the other.
Um, Yeah, I don't know if I may not do a good job saying what's preferred, like which is the preferred way here. Um, Generally speaking, I think if you are both are very feasible ways. So you enter into a well-established one of the top VC firms in the world and make your way up through the chain and make to the partner level is also very doable. I think the couple of considerations is such firms generally are again very tight knit. So you need to have a certain pedigree of
Mm.
academic accomplishments, experiences to be first joining the firm. And then you have to keep in mind that you are competing with the top talent in when that firm has hired. So you will have to demonstrate that you're at least comparable, if not better than the other players, I mean, other colleagues. So that's considerations there. But on the flip side, if you there are other ways to become general partner too. One is to to the point that you made is you make your fund or join someone at a slight or at a less established firm and build that experience, build network, build deal flow, show one or two really good deal that has an exit or portfolio, a strong portfolio to to these one of these established firms, and you can get to a partner at that level by showing that success in a less established firm. The third way is an entrepreneurship way. So you can be an entrepreneur, you can be an operator, a CEO, founder.
Mhm.
You will live the life of an entrepreneur by doing all the things that you have to do to grow your business. And if you are successful, and success can mean multiple things here, you can take business all the way to exit, or you've grown the business, you've raised hundreds of millions in capital. Now, again, if you wish to change and become an investor, so shift from an operator, become an investor, that's other way. Because when you are an operator, you made deep connections with VC network who funded you.
Mhm.
If they like you, if you like them, there is a fit. They like the way you think about the and again you have a deep knowledge in the space because you are
Yeah.
growing a company in that space. All the reasons for you to join the VC firm and could be a partner there.
Okay, understood.
Audio Jungle.
Now let's move on from becoming a venture capitalist to actually being one. When you are deciding to back an early stage team or a team that's come for seed stage funding, what are some founder traits or attributes that you place importance on and that you like to see in people that you're investing and backing?
Yeah, that's an extremely important question. We try to answer internally in our sessions, in our investment reviews. I think, this may sound repetitive in a way, but two or three key criteria that or qualities we'd like to focus on is so first is prior experience
Uh-huh.
in terms of being a founding member and taking and growing the company.
Yeah.
Do they have any experience at all? That's the first thing. Or they are completely new to being a business owner or a founder or a
Uh-huh.
CEO. That's the first component. The second component is look at the management team. Sometimes it's not just one person, but generally more than one, like a team of two to three or three to four, the management team, to see what kind of execution capabilities they have.
Yeah.
Because you can have the best ideas in the world, and we all know that, but it all in the end comes down to execution.
Wait, how do you measure execution capabilities? Like, what do you see that tells you or gives you the inclination that, oh, this person is better at execution, or this person is probably better? Like, how do you measure that?
Yeah, that's a great question. There's no real black and white answer to it. We try to understand by asking questions around their previous life in terms
Yeah,
of what have they done and how and why. Because more often than not, unless there is a big transformation that happened in the person's life, they are going to be doing things in a similar way.
yeah,
So that's where we try to judge that would this person be able to take the company to the next level. The
mm,
next level doesn't mean the biggest, baddest growth. The next level means you define what that next level is, and does this person have the ability to work internally and externally? Because when you're a
yeah,
CEO or a chief officer of a company, there are a few things. Even if it's a team of five or seven, you need to be able to work with your team internally and then certainly being able to work externally. So you can be the brightest mind in the world, but if you cannot communicate and if you can't motivate and inspire people with you and other partners and investors, you're not going to go anywhere. So as you can see, my answer is not black and white. It's that ability to when you interact with the founders, understand that do they have it in them to take the company to the next level.
So, do you look at like previous projects, like maybe some initiative that they started, whether they were able to like successfully implement that, or whether they were able to grow that initiative and make it achieve bigger and better things?
Partly, yes, yes. Prior experience in whatever that could be. It doesn't have to be a business in itself, but any initiative
Yeah,
that they started and they took it to the next level.
yeah.
And whatever level that is, they can explain it to us. I would ask the founder to explain to me, how do I know that you are able to execute on this? And if that person is not able to communicate and explain that to us, that in itself is a big answer, correct? So, and the third component is beyond the people or the management team is going to be the idea. Sometimes that what I mean by that is like how unique or proprietary that is. If you found something like, like the next new biggest innovation, and our experience allows us to know, like, with our the intellectual property that can be built on that, that is one more reason for us to look at the company with a different lens. So it's idea, what exactly it is, and the people.
Moving on, when students or first-time entrepreneurs build in healthcare, what are the most common blind spots or mistakes that you see in their product design or market approach or just general approach to growing the business?
Oh, that's an excellent question. I'd say the most common mistake or a flaw is that there are two, actually, I would say. One is that they are not solving a real problem. And what I mean by that is that it's not a universal problem. It could be a very myopic view to solving a problem. So it is almost like I have a solution now, let me find buyers for it. It's the reverse
Hmm.
of like, um, let me understand what the buyer is looking for, then build a solution. Because in healthcare, what we see is different from other markets. In healthcare, at least in US, it's not all out of pocket. It's insurance that's paying for the insurance companies are paying, depending on what business model you have. But there is a component where how do you get paid and what you get paid needs to be looked at. And which is what we see is missing in many of these early stage healthcare companies is that they have a solution, sometimes even a unique one. But what's missing is who's gonna buy it, what's the commercial model, who's gonna pay for it, and how much and why. So, which are these key questions? You may think that this is so logical. How can that be missed? But more often than not, we see very elegant solutions, but we don't have a plan from the team to explain to us how they're gonna sell this in the marketplace and to who's the end user.
Yeah.
And
Um,
healthcare is very complex. If you think of the healthcare ecosystem, you have a patient, you have a provider or a doctor, you have an insurance company, you have a caregiver, which is taking care of the patient. Like and then you have manufacturing companies or drug development companies. So it's a very complicated or a complex ecosystem. And how do you manage all these different stakeholders? Because different stakeholders are making different decisions. A hospital is deciding that you get this surgery, but an insurance company may not pay for that surgery. So who am I to sell to? That's an example
almost.
of
Hmm.
that's an example of what these companies need to think before they start executing
Yeah.
on it.
Like you almost have another like two consumers in the supply chain. Like you have to focus on
Right.
like selling to these hospitals and then also like marketing these products to consumers so that they have the incentive to go to these hospitals and get that product. So almost like marketing
Exactly.
to different
Yes. And it's different value prop for different end user.
yeah. Anyways, throughout this podcast, I guess you would say you spoke about founder quality and the product and the idea itself. But if you had to choose between one of these, which is more important and why?
I'd select the people component, the founding or the management team over the idea. The idea may be a not an extremely unique or proprietary or not that differentiated, but I think a talented, dedicated, experienced management team will still make that idea work and eventually grow versus the other way around. If you can have the best idea, but if you don't have the right team to drive it, it's not gonna go to the next level.
Hmm.
So I will always select people over the idea for the most part.
Wait, if the let's say the venture capital firm doesn't really like the idea, they want to maybe modify it. Can they have that influence on the business? Can they like tell them, okay, I want to modify your idea in this manner so that you reach this consumer base rather than the one that you're focusing on currently? Like, can a venture capital firm have that influence?
Yeah, absolutely, yes. So generally, when companies are raising funds, there can be more than one venture firm. There's a lead investor, and then there are like other investors in the mix. And depending on what is being negotiated, some of these, I'd say to simplify the discussion here, the lead investors would certainly get a board seat. And when you get a
Hmm.
board seat on the board of directors of that company, the reason why you have a board seat is to be able to
Hmm.
positively influence the strategic growth of the company. So if and it's a lot of value because these venture companies, they have seen a lot of this in their previous experiences. They've seen thousands of companies. They bring in a lot of experience other than the capital. So yes, that's how they would influence and positively influence the company that they're investing in. So imagine instead of taking 5 years to get to the revenue, the company can get to revenue in 2 years because these board members who are founder or VC firm partners, they have experience in doing that. So, and I'm going to bring this to, and I'm going to tie this to your initial question in the previous segment was that how,
Mhm.
you are a early stage VC founder, you don't have that experience
Mhm.
of trying to help a company grow faster because you probably have not seen as much as any other VC investors have seen. They know how would the markets react, what the economic cycles are.
Yeah.
All that component is a big component. So that's again a differentiator for them.
Moving on to underrated, overrated, or fairly rated. I'm going to give you some statements, opinions. You're going to tell me whether they are underrated, given not as much importance as they deserve, overrated, given too much importance, or fairly rated, given importance they warrant. The 80-20 principle, which for listeners that aren't aware, suggests that 80% of returns come from 20% of efforts.
I'd say it's fairly rated,
Moving on, working as a solo GP.
overrated,
The practice of heavy portfolio weighting towards AI and emerging tech companies.
fairly rated,
Negotiation as being the top VC skill.
fairly rated,
Then quality of investments over quantity of investments.
underrated,
Learning about venture capital through the internet, like we are doing today.
overrated.
That's about it.
Audio Jungle.
So that wraps things up. Just a few questions that you can answer briefly before we conclude. Is there one particular healthcare or biotech company at the seed, Series A, or just the upcoming or growth stage that excites you and is worth watching?
Yeah, I think so. Healthcare is an exciting space. We longevity and wellness is where I personally get very excited. There's a company called Bionic Health. Is pretty they're doing cool things. We are trying to bring a lot of different data sets together and kind of tell you what your body is doing right now and how it will do over the next 20 to 40 years.
Mhm.
So that's something to watch out for. I think that space is gonna grow a lot.
Awesome. And lastly, I was really intrigued by your transition from like as the scientific research component to investment banking to venture capital and how going to business school played a role in that. So, what is one key takeaway from your career as a venture capitalist that could offer value to the upcoming generation of VCs?
Yes, so I'd suggest for aspiring or early stage career young adults to really keep networking as an important tool in their toolbox. And the reason that I say that is that for every next stage that you want to go to, you want to be able to connect with somebody who's been there before and how they got there. It really opens up a lot of doors and ideas that you may not have even considered. So having a network which can be informational interviews, mentors, or anything in between will be extremely meaningful.
Apologies for the follow up on this, but I often hear sayings like network over net worth or just the importance of networking. Do you think that's a bit overrated, or is that really like a fair assessment of the importance of networking?
In my view, it's not overrated, it's fairly rated. I see it as a very crucial skill to have and an asset to build on over the term of your life career. So I suggest that one should focus on networking.
Well, thank you so much for coming on the show. Thank you for taking your time. I'm sure the listeners or viewers learned a lot. I myself personally learned a lot from your story and the insight that you had to offer. So, thank you for coming on the show.
Thanks, Navan, for having me on the show. There were some really good questions on that.
Thank you.